We know that a lot more can be done if only we can effectively curb the challenges that so greatly plague this sector. And a key part of this is providing data to enable key decision makers make the right decision. Here at AFEX, in addition to providing a marketplace for more effective and efficient buying and selling of commodities, as well as storage and financing solutions for the ecosystem, we also see it very necessary to provide this much needed data. And so, this report is one of the many reports which we release to the public in a bid to help key investors make the right decisions that can indeed transform this sector and help Africa to feed itself, which happens to be the mission at AFEX. Without further ado, we'll be unpacking this discussion in 4 major segments. First, we'll have a brief introduction of the report, and this will be taken by AFEX's COO, Akinka Akintunde. Second, we'll go further into detailed discussion of why the report is important. And this section will be handled by Kamaldeen Raji, the MD of AFEX Fair Trade Limited. After that, David Ibidapo, a senior research analyst here at AFEX Commodities Exchange, will take us through the crop production survey report. That will immediately be followed by a Q&A session, also by David, who would then be accompanied by Imbola, who is a communications analyst here as well. For this section, this Q&A section, we'll first take questions from the press and would kindly require for people to raise up their hands. We'll randomly select a few people to speak, and everyone else should please feel free to post their questions in the chat room, and we'll take them from there. And over the course of the discussion, everyone can actually be posting their questions in the chat room, and we'll take all of the questions at the end under this Q&A segment. Finally, to close out, Nathaniel Etim, the head of strategy and corporate finance here at AFEX Commodities Exchange, will give us the closing remarks. And now, let's welcome Akinka Akintunde for the brief introduction. Thank you.
Thank you, Luchi. Really appreciate this. Good afternoon, everybody. It's great to be here. We really appreciate you coming to join us on this important unveiling we're doing at the moment. Once again, welcome to the 2021-2022 AFEX crop production reports. This year has experienced a lot on the macroeconomic level, as we see various policies play out at both the fiscal and monetary policy levels. Commodity prices experienced a huge rally in 2021 on the back of ban of importation of maize, which led to an increase in local demand, causing the price basket to skyrocket. In fact, this year we experienced over 70% increase in price of commodities on the local front. This increase, coupled with low national storage facilities, has made price stabilization by policy makers a very, very tough assignment for them to handle. Also, input prices were not left out, as it also recorded an increase of over 40% in the year. The much awaited Dangote fertilizer, urea fertilizer hit the local market this year, which was able to augment the dwindling supply that was in the markets. However, consumption and availability of urea is highly subjected to international demand. As you know, if the dollar is favorable, you'd rather export than release locally to the local markets. We see all this possibly affecting the price of commodities due to the fact they have at the input leg of the process, right? If farmers don't have access to quality inputs in a timely manner, then it makes it very, very difficult for them to have a favorable yield. Our price production report seeks to project production values across key commodities. This year, we're able to engage over 10,000 smallholder farmers that are distributed across the country. And our survey was able to pick up key insights into the agricultural industry, which we believe will enable processors of these commodities and other key stakeholders, such as policymakers, have quality insights into their decision-making process. One of the things that is greatly lacking in Nigeria, and to a large extent in most cases, is the fact that we don't have data to make informed decisions. At AFEX, we have put in structures in place to ensure that we can have an avenue for us to capture quality data and use this quality data in making informed decisions. There's no way we can set appropriate policies if we don't have sound visibility on what has happened in prior years to make a decision in terms of how best to move forward. Some of the key insights from the report we did are: we expect projected harvest to be higher than previous years, although marginally. Another key insight we've seen in this report is that price of commodities are expected to be higher at the start of the season when compared with previous years as well. Although the farming age is quite old, as we are all aware, these farmers don't have the capacity to scale their production due to the absence of key infrastructural requirements required at the government level to be provided. Smallholder farmers used less of commercial loan this year. This could be attributed to higher price of commodities, which was able to inform them to save more and access the markets earlier, taking less of commercial loans. And then also we discovered that smallholder farmers are increasing the adoption of fertilizer for their production across all commodities we surveyed. And this is despite the fact that price of inputs into the production phase of the business experienced about 40% increase in prices this year alone. In summary, across all commodities we surveyed, we noticed a marginal increase in production volumes, despite a higher than average price of key inputs. This increase, however, was not sufficient to topple the upward trend of commodities prices. As such, we expect price of commodities to start from a higher base when compared to the previous year. This is going to be the focus of the report we'll be sharing with you today. Once again, we appreciate you joining us on this, and we look forward to being able to engage you and put in the appropriate value there, which we believe will serve as inputs into your decision-making process, either as a milling farm or a policy maker, or even farmers that hope to access higher markets. Please join us as we explore the in-depth report for the 2021-2022 crop production report. Thank you very much. Adana, Oluchi.
Thank you, Yinka. Thank you very much, Yinka. We're bringing Mr. Kamal Dean Raji to talk to us on why the report is important for the market. Over to you, Mr. Kamal. Hi, Mr. Kamal. Okay, so while we're waiting for Mr. Kamal, please, David, bringing up David, Senior Research Analyst here at AFEX, to run us through key aspects of the report.
Good afternoon, everyone. It's really a pleasure having everyone here, and bringing you this report is actually something we are very happy about, right? So we started the process. So while I'm talking, I'll try to share my screen so that everyone can see. Okay, so we started a process last year where our intention was to understand what the planting season was like across different regions in the country, right, and across farmers. And our major objective here was to ensure that we're able to forecast what production levels would be and also give an outlook for prices so that every stakeholder and investor can actually take position accordingly, right? So we're happy to bring you a second edition of this 2021 AFEX crop production survey report. And I'll be running through the slides shortly. And I think I have about 10 minutes to do that. So just ride along and let's see what the report is saying. Thank you. So I'll be focusing on these outlines. We're taking a look at the focus crops. That's those crops that we focused on. So most of the crops that we focused on are crops that we correctly capture on our exchange, right? Both green commodities and also export commodities. Then I'll also run through the survey, the objective of the survey, then also the demography, look at some general insights that we saw during the survey, and also run you through what we think our production forecast will be, and also our price forecast for the year. All right, so this year we focused on eight major commodities actually, but due to the fact that we didn't have a good representative sample for cashew nuts, we had to drop. So now our focus is 7 commodities. So we took a look at maize, sesame, soybean, paddy rice, ginger, cocoa, and sorghum, respectively. And from our survey, we were able to also identify the fact that most farmers actually planted more than 2 crops, right? So a farmer could have planted maize, sesame, and soybean, for example, or maize, paddy rice, and sorghum, the combination of those, right? And from our survey, we're able to establish the fact that most of these farmers that we surveyed, right, actually cultivated between 1 to 5 hectares, right? And last year was also the same, and this year we're also seeing the same trend, right? And what's most important for me in this report is the fact that if you take a look at the experiences of farmers over the years, you can see that most of our farmers actually fall in the category of more than 10 years in terms of experience, right? And so if you take a look at the fact that a lot of farmers have actually cultivated crops in the last 10 years, like more than 10 years, right, have this experience, and most of them actually are cultivating between 1 to 2 hectares, 3 hectares, 4 hectares, right? That's actually a very that's something to be worried about, right? Because it could only mean, amongst other things, the fact that farmers have not been able to scale over the years, right? And also the fact that it could also signal the fact that most of our farmers actually fall below the poverty line and are not able to acquire more lands for their planting. And that could also have translated, or that I would say has translated over the years to the supply gap that we can find across our commodities: maize, soybean, paddy rice, sorghum. We are beginning to see that consumption levels are rising faster than the production levels nationally, right? And I've caught up, right? In the next 2 to 3 years, we'll start seeing a supply gap in sorghum. Ginger, cocoa, and sesame, the same thing, right? So this is worrisome. And if we, over the years, I've always pointed out to the fact that smallholder farmers actually contribute to more than 80% of our total production, right? Production annually, right? Then I think one of the discussions that we could be having right now is, okay, how do we move smallholder farmers, small-scale farmers, how do we graduate them into medium-scale farmers and ultimately large-scale farmers, which I believe will be beneficial to the goal of attaining food sufficiency, right? And could also help like solve challenges around pressures on prices of commodities, which is most times driven by supply shortages of these commodities. Now, when taking a look at, sorry, let me minimize this. Okay, so taking a look at our survey objectives, we have four major objectives here. So we set out to understand the planting behavior of farmers in 2021 wet season. And also, as a result, the intention was to forecast what production levels would be like for the year, and also provide an outlook for commodity prices and prefer recommendations that we think the government and private organizations like AFEX could actually do to ensure that we contribute to achieving food security in Nigeria. And I think I need to also emphasize the fact that it's very important right now that we need to start looking at ways to actually achieve food security. And I believe that this is one part of our of a potential food balance sheet that we need to pay close attention to and see how we can actually scale production levels. So now taking a look at our survey demography. So from the pool of responses that we got from farmers this year, and we can see that 55% of farmers were AFEX farmers and 45% non-AFEX farmers. Now, AFEX, we have a pool of a large database of farmers that are currently registered on our system, and what we did was to ensure that we leverage on these to get a perspective of what planting season is like for the year, right? And also we're able to interview non-AFEX farmers. So we set out to interview, to survey 25,000 farmers within the space of 1 month. However, we were able to get responses of 9,117 farmers, right? Which we believe was also good enough to allow us draw our insights and ultimately our forecast for production level. So most of the farmers fall between the age group of 30 to 39. So we could still categorize these guys as more like they fall in the youth bracket. So this is the total number of AFEX farmers that we have and non-AFEX farmers accordingly. We were also very intentional to ask farmers the position they held on the farm. And we believe that speaking to the owners of this farm actually would make a lot of sense for us, because we believe they have the right knowledge to share for the planting activities for the year, right? And our gender, so we understand the challenge around gender. We still have more male farmers nationally than female farmers. Let's hope that changes soon. All right, so based on our region, we could see that most of our responses were skewed more to the northwestern region that's largely dominated by grain commodities. Then, so you can see this chart. I think this is self-explanatory, so let me run through. Now, so for individual commodities, so for maize, we got more responses from the northwestern region. And from what we can see here, we can see that allocation of farmland to maize, if you look at 2021 compared to 2020, most farmers actually attested to the fact that they cultivated the same land. And across all the commodities that we surveyed this year, we could see similar trends, right? So most farmers actually stated that they cultivated the same hectares in 2021 as they did in 2020. Right, and that also points out to the fact that we are not really seeing farmers acquiring more lands or accessing more lands to plant commodities, and this is actually a challenge and could also impact on our production levels. Right, so if you take a look at farm size, you can see that more than 80%. So when we add up the farmers that responded to using less than 2 hectares and those that use between 2 to 5 hectares, right? More than 80% actually fall within the category of 1 to 5 hectares in terms of land usage. Then fertilizer usage also, we can see that, so we broke this down to non-AFEX and AFEX farmers. And one of the reasons is because at AFEX, one of the activities we carry out is input financing, right? Because we believe that access to input is one of the major challenges faced by smallholder farmers, and it's important that if we are able to solve from that end, right, we've solved at least half of the problems of the farmers, right? So you can see that more farmers used fertilizers during the year compared to 2020 for AFEX farmers, and for non-AFEX farmers also. Like harvest expectation for maize. So we also went ahead to ask farmers, okay, what do they believe harvest will be like for maize? And there are reasons for that, right? So we can see that most farmers are actually rather optimistic that we would have higher production levels for maize in 2021 compared to 2020. Why 40% of these farmers are rather pessimistic. They believe we will be having less harvest. So take a look at the bags of maize intended to sell upon harvest. Most farmers are actually taking position to sell more bags this year than last year. And one of the major reasons that cut across all the commodities is the fact that they needed to take advantage of higher prices this year compared to last year. Soybean, the same trend witnessed, right? Most farmers used the same farm size in cultivating soybean in 2021 compared to 2020. The farm size also, you can see that most of them are also within the 1 to 5 hectare brackets. When you look at fertilizer usage, right, most actually attested to using more fertilizers this year than last year. Then harvest expectation, we see that most farmers are not optimistic. So we are seeing 48% of farmers saying that no, I think soybean harvest this year will be lower compared to last year, right? And they also attested to the fact that they will be selling more bags. So across other commodities, we are seeing the same trend, right? So I would just rather focus on the farm size and also the harvest expectation, right? So as to be able to talk through the slides. So, and by the way, these slides will be shared to everyone that we have their contacts, right? So farm size also for paddy rice, you can see the same, and harvest expectation, more rather optimistic about harvest this year than last year. Then for sorghum also, we can see the same trend, right? But for sorghum, we are seeing that farmers are anticipating lesser production this year compared to last year. Then for cocoa, right? So cocoa, we are seeing the same trend, right? Most farmers cultivate between 1 to 5 hectares of land. The same farmland was allocated to the production of cocoa this year as last year, and most farmers are optimistic of a higher production level for cocoa this year than last year. The sesame, farmers are forecasting to see lesser volumes this year compared to last year. For ginger, we are seeing more, they're rather optimistic for higher volumes this year than last year. Now, jumping into the survey insights, like some of the general insights that we notice, right? Just like it has always been in prior years, right? We've seen that topping the chart of farmers' concerns during planting seasons, like the 2021 wet season planting, we can see that low access to input still ranks the first, right? When it comes to farmers' concerns. Low access to loans also, right? And pest infestation, high rainfall. But speaking to low access to input and low access to loans, right? So we believe this will provide more or less like a policy direction, right, for the government and also for private organizations like AFEX in tackling the challenges of smallholder farmers in Nigeria. And if we are to make them scale, right, from being just a small scale farmer to a medium and ultimately a large scale farmer, which we believe is beneficial to the Nigerian economy, and should in case we want to actually unlock gains, during the Africa Continental Free Trade Agreement, which we believe we have a strong advantage in the agricultural space, right? We must look for how to solve these issues, these structural issues, and ensure that we boost and support production levels, right? Because we have to feed ourselves first before we start thinking of feeding others, right? So low access to inputs is a major challenge. Low access to loans is also a major challenge, right? And that's why at AFEX, one of the things we prioritize is also seeing how we can unlock finance to provide inputs to farmers, and also how we can unlock finance to also provide loans to farmers and ensure that they're able to direct it into profitable activities that would ultimately increase the income base of farmers, which is better for the Nigerian economy, right? So if you take a look at our fertilizer input loans, you see that lesser farmers this year attested to the fact that they got fertilizer input loans. However, so we are attributing this to the fact that last year we saw higher prices of commodities, which enabled farmers to save more, and they were able to finance themselves when it comes to purchasing fertilizer as to getting loans, input loans. And when you take a look at the suppliers of loans, right, this year, just as we had it last year, we can see private organizations topping the charts in terms of giving input loans, cash loans, inclusive loans, and other form of loans to farmers, right? And we can see government agencies at the bottom of the chart, right? And I think to scale farmers, right, one of the things we have to do is to see how we can also increase loan disbursement, or how farmers can get access to loans from other sources also, so that we ensure that, yes, we are supporting production levels, right? So moving to the intention of farmers this year. So like I stated earlier during the presentation, that farmers' intention this year is to sell more upon harvest, and one of the major reasons for this is the fact that they want to take advantage of higher prices this year. So if you take a look at the annual prices of commodities, the average annual price of commodities this year against last year, you see that we saw a jump in prices across all the commodities, all the focus commodities in this year's crop production survey. Now, going to the main focus of the reports, what's AFEX forecasting for production levels, and what's our price outlook for the year? All right, so this slide just shows us that now, because we understand, right, that it is important not to take the responses of farmers as it is, right? Because when you engage with farmers, one of the things they will naturally say is, inshallah, right? By the grace of God, they're largely faith-based, that, oh, they would get more production this year and everything. But we went a step further to ensure that, yes, we make our own estimates, we do our own analysis, right? And also based on some factors, we ensure that we come out at an appropriate volume forecast, and also a price forecast for this year's production figures, right? So for maize, we are anticipating that there will be a marginal increase by 3% in production levels. And by the way, right, 2020 and 20, so everyone you see that is highlighted red here are our own estimations for 2020 and 2021, right? So for maize, we are anticipating a 3% increase in production levels. For soybean, we are anticipating an 8% increase in production level. For sorghum, a 1% increase. For paddy rice, 10% increase. For cocoa, this year we are anticipating that cocoa production volume will decline by at least 8%, right? And I will speak to some of the reasons for this forecast in the later slide. Ginger, we're anticipating a 4% increase, and sesame, we're anticipating a 12% increase in production levels upon harvest. Okay, now, so like I explained earlier, right, if you take a look at price trends across the years, right, we can see something very, very unique across commodities. And this is the surge in prices as of 2021 across all the commodities that are captured on our exchange, right? So we can see maize, you can see this huge jump in maize price in metric tons. Then also in paddy rice, we can see this huge jump, and also ginger prices, right? One of the major drivers of this increase across these commodities is the fact that supply for these commodities were actually low last year compared to the demand levels, right, as a last year for these commodities, right? And also some other factors played into the surge that we saw in 2020, for example. If you take a look at paddy rice, the old land border affected the rally we saw in paddy rice. If you take a look at maize also, we saw a rally in 2021. And in fact, as a matter of fact, I think the CBN's intervention in the maize market didn't allow the prices to go haywire this year, right? We take a look at ginger, we can see we saw a lot of export activities for ginger, for cocoa. And also, if you take a look at sorghum, right, huge demand for sorghum in 2021 that drove prices, right, to this height. The same with soybean. Now, so here is our price forecast for these commodities. So for maize, we're already seeing that demand pressure, we're already seeing a signal of high demand pressure for maize as we started seeing a lot of processors going to the market to purchase maize commodities despite their high moisture content levels, right, at around 18%, right? So we are seeing this surge in demand, and as a result, if you look at the minimum base price that we are forecasting this year for maize price to start upon harvest is 170,000 naira as against 150,000 same period last year, right? And by the end of December, we are forecasting that maize price should range between 170,000 per metric ton to 180,000 per metric ton. However, as the usual trend we witness in commodities, right, upon harvest, more supply in the market, and a more like stable prices, right? But during the season, and speaking to May, June, right, we expect that prices should settle between 210,000 per metric ton to 230,000 per metric ton, right? However, we understand that the CBS intervention in the industry should still be on the pressure of prices this season, and that's why we are forecasting a 210 to 230,000 naira per metric ton for maize. For soybean, we are anticipating that due to the higher supply in soybean production levels this year, should provide some respite to price, right? If you take a look at last year in Q4 of 2020, soybean price jumped by around 40%, right? If you take a look at 2019, 2018, we see that soybean prices during Q4 naturally jumps by at least between 20 to 30%, right? But Q4 last year was different. We saw a 40% jump after COVID-19 pandemic. So we are forecasting minimum base price there was 199,000 per metric ton, right? We are expecting a higher base price at 320,000 per metric ton this year. And we're expecting that it is going to range between 320 and 350,000 per metric ton by the end of Q4 2021. May, June, we expect soybean prices to range between 400 to 450,000 per metric ton. For paddy rice, right? So paddy rice price stood at an average of 160,000 per metric ton. in 2020, which represented a jump by 33%, right? We are expecting that production is expected to rise by 10%, right? And we're expecting that paddy rice price is going to be declining by 7% upon harvest. But when you look at the minimum base price that we're taking a look at, right, we're expecting paddy rice price to start at around 200,000 per metric ton and close at about 210,000 per metric ton, right? For sorghum, right, we started seeing a lot of surge in terms of demand, right? So local demand for sorghum has actually increased, and one of the major buyers of sorghum are the brewers, right? And if you take a look at what the FX market is saying, it's not really favorable for the brewers. So we've seen a more like we've seen a shift into the domestic market to source for sorghum, right? And as a result, if you take a look at what happened by July this year, right, prices rose to an all-time high of 266,000 per metric ton, right? However, in August, following the entrance of maize into the market, right, given the fact that sorghum and maize are actually close substitutes, right, we saw a 13% slump in August in terms of prices, right? However, we expect a further moderation in sorghum price, and we expect that by 2021, sorry for that error there, by 2021 Q4, sorghum price should be around 160,000 to 170,000, and largely because there's always a shift to maize when it comes to demand, and by January we start seeing a lot of shifts to demand shifts to sorghum by the time supply for maize is actually going so low, right? For cocoa, we are expecting a significant pressure on cocoa prices, and it's on the back of the low volume production for this year that we anticipate, right? And another factor that we believe is going to be driving the price of cocoa is the fact that if you take a look at Ivory Coast outlook for cocoa production this year, right, they're expecting a significant drop in cocoa production, and largely due to the fact that, largely due to prolonged rainfall, right, which is now affecting cocoa pods, and also the fact that Ghana in the international space, Ghana made their intention known to increase value and stay away from exporting raw cocoa beans, right? So we are forecasting, we are anticipating more demand for Nigerian cocoa, right, in the midst of this, and the fact that, and this is also amid the fact that we are anticipating a lower supply for cocoa, right, during the season. As a result, we forecast that cocoa prices will settle at around 1.3 million to 1.350 million per metric ton by the end of Q4 2021. And we expect that, and one other factor that we think is going to be driving, which could also drive prices, is what the FX market is saying, right? We expect that for further depreciation in Naira against the dollar, right, it's going to spur more demand for cocoa, for Nigerian cocoa, and amid our lower supply of this commodity, we may see prices begin to shoot up. Also, when we take a look at ginger, we're also seeing strong demand for Nigerian ginger amid the effect of weakened Naira. And also, there already exists a large demand. So we've already started seeing a lot of informal pre-contract terms already agreed upon, and requesting for large volumes of ginger, right? And so we expect that prices should settle around 1.1 million to 1.2 million this year. That's Q4 2021. And we expect that by next year also prices is going to increase further to reflect the supply shortage and also the increased demand for the commodity. As we saw it last year during the pandemic, a lot of demand for ginger we saw a lot of demand for ginger, only to the fact that most people thought or believed that ginger was the usage of ginger actually would help in curing or even controlling the spread of the COVID-19 virus. Sesame, we anticipate a higher production, like we stated, around 12%. And we expect that this should actually weigh on prices this year, right? And also we're anticipating currently sesame price is around 700 to 750, but we believe that people have already priced the upside of this commodity and should cap at 750,000 per metric ton by Q4 2021, reversing a possible 5% decline in price upon harvest. So here we were also able to outline some risks that we believe could actually impact on commodity prices. And this is my final slide for today before we go into our Q&A, right? So we believe policy intervention is going to pose a major, it's a major factor, right, to commodity prices in this new season. We believe that, for example, the ongoing CBN intervention in the maize market, right, would actually stem the pressure of maize prices, right, this year. Though we still see an increase in prices, but when compared to prior years, it will be fast-paced, right? Infrastructure gaps, right, like the recent blockage of Niger, that was last month, right? We perceive that such infrastructure gaps could also affect prices of commodities, right? And also the fact that when you take a look at Nigeria's capacity to store its grains, right? We are talking about Nigeria just has the capacity to store about 5% of total grain production in Nigeria, like domestic grain production, right? That's actually very low, and one of the reasons why the smallholder farmers may not be motivated to increase capacity in terms of producing more commodities, because they don't have where to store it, right? And with every lower production volumes of that smallholder farmers would seek to produce, right? And with our increasing population size and increasing consumption levels, right, we would always see a pressured price, right? Then insurgency, insecurity remains a big threat to Nigeria's food systems, right? I would think that if not curbed soonest, right, we'll start seeing a significant impact on prices, especially next year. Then also we believe that FX movements would also affect prices coming year if not addressed, right? So on this note, I think I've overshot my time. I would say thank you for listening. So we'll just jump right into the Q&A. Thank you very much.
Thank you, David, for that insightful presentation. I'm certain most of us have questions or comments you want to ask or get clarified. So you can kindly raise up your hand in the chat box or drop your messages there. Especially if you're a journalist, just raise up your hand. We're going to call you in shortly. Thank you.
So while we wait for the questions, we can see that some people have already dropped questions in the chat box, and Akinka has already started responding to them. Thank you very much, Akinka. So while we wait for more to pile up, Mr. Kamal is now available. So please, Mr. Kamal, please come up and tell us the importance of this report.
Thank you very much. Thank you for having me at the same time. I think for the first time in a very long time in the history of Nigerian agriculture, we are having this kind of deliberation. And just like every one of us is quite aware that agriculture is as important as human being. And as human, we keep one or two things to be able to meet up with the demand of life and others. Agric produce can never be overemphasized for its role. And today, we can say without mincing words that 25% of our GDP is coming from agriculture, which is fine for the first time. And at the same time, we need to check out some other things. The impact of these reports is so numerous. And I can say that this will help farmers and processors to be able to plan their production, their access to market at the same time, so that they'll know when to aggregate, when to move, and how best they can store this grain. And at the same time, the other thing is that it is showing glaring to the world that the adoption rate of best practices in Nigeria is on the increase, and definitely it's like a roadmap to food security. So if the production is on the increase year in, year out, adoption rate is on the increase year in, year out, then our food sufficiency journey is close by. Another thing is that land usage across board would be better, because we all know that the percentage of lands that are laid fallow is still very high as far as Nigeria is concerned. And it simply shows that if you are looking at a better means of livelihood, a better source of earning your salaries, then investing in agriculture will be one of the best options. Another thing that we all need to consider is that farmers are becoming a major part of our livelihood as a nation. Just like Akinka said during his presentation earlier, that we got from the report and feelers we got from people across our facilitation and operations areas, a lot of people, local farmers, said they traveled for Hajj last year, or no, in 2019, because the price of local commodities is appreciating. And with this higher yield, it means it will be more appreciated. It will move up better, and everybody will enjoy and probably see the good side of agriculture. What other things we need to check is that this will really help us to replan our development as a nation, because if the yield is on the increase, the GDP contribution is on the increase, then there will be proper planning for agriculture from the federal government, from other big stakeholders within the government agencies and private sector. This will always also show to the world that, okay, if you are planning to convert those old warehouses that we used to have around the Keja and other places in Nigeria to maybe a worship center or any other thing, now you will have to have a rethink to say, okay, if agri produce is on the increase, definitely all the buyers will have to look for a place to store them, and where and how. So all those things are part of the positives of this report, and the importance of this report can only be felt at the end of the day when we see farmers trooping in their numbers, changing the color, changing the rhythm around what is agric, and agric as a business and not just a passion. And at the same time, adopting best practices to say, okay, from getting 16 bags, which is less than 2 tons, to getting 40-something bags, which is more than 4 tons. And at the same time, being able to assess markets, not selling just anyhow. And all these are all positives and greater impact on agri in Nigeria. So generally, this is going to be continuous, and we are going to continue to engage the farmers the right way, which at the end is going to be a positive for Nigeria and not just AFEX. And this is also meant to put everybody on the line that agri is beyond what the people are claiming that is scattered. You cannot get this, you cannot get that. Then this report will help everybody, help the banking sectors to have a rethink about lending money to farmers, smallholder farmers, have some stakeholder, community stakeholder, to have a rethink about how to engage their local smallholder farmers and how to be of help everybody to have a better vision about agriculture and how best we can approach it at the long run. Thank you all for your time, and I wish everybody a very happy harvest. Thank you.
Thank you very much, Mr. Kamal. Thank you so much for clarifying that. Indeed, the challenges that plague the agriculture sector, they are so glaring, and we can clearly see how at the foundation of fixing it all, we need data. So thank you very much, Mr. Kamal, for clarifying that. So we're now going to be moving on to the second to the last segment of the presentation, which is the Q&A section. So David will be taking this alongside other panel members. Okay, I can see one hand up. I can see one hand up. That's from Nnabuike Kanife. Nnabuike, would you like to say a question? You're unmuted, but I can't hear you. Okay. In the absence of that, I'll move to Opeyemi Abdul Salam. Okay, Nnabuike, you can go. You can go ahead, please.
Hello.
Yes, we can hear you clearly.
Okay, so the question I have is, what is the vision and the plan, that the company has for the youth in agribusiness who are just coming up? Because most people in the rural setting, they are just old and they can't produce much, and we still have more people to feed. So what's the plan that the company has for the youth who are in agribusiness? That's my question.
Thank you so much for that question. It's Nathaniel speaking, head of strategy and corporate finance, and I think it's a very valid question, especially in light of what we saw, where about 4% of commodities essentially is being cultivated by farmers at less than 30. And so, yeah, a lot of work needs to be done. What we are doing here at AFEX is to roll out a model called the Agri-Service Provider model. Using that model, essentially, we'll be empowering agripreneurs, also farmers as well, to ensure that in regions where we don't have full operations, we provide them the inputs that they need. We provide them the capital that they need to access warehouses and all other equipment that are necessary. And so once we empower these agripreneurs, what we call the agri-service providers, we think that they can then engage other youths and other farmers as well. So generally, we can then see improvement in the sector in the next 4 to 5 years. Hope that answers your question. Okay.
So thank you. I will reach out to you.
Thank you.
Yeah.
In addition, in addendum to what Nathaniel just said earlier on Kanife's question, I think before now, Kanife, we are engaging more farmers, and especially the youths are part of the program. And this simply means that not everybody will be a primary producer. We have a lot of other things for everybody as far as agriculture is concerned. Today, Kanife, apart from you being a farmer, if you have a younger brother who has some money to be spent on investment, he can just use his COMEX and he will be earning. without any noise anywhere. And we have a plan to make sure that every sector of the Nigeria population is engaged on this journey. So as far as we unveil some other things, just like Nathaniel said, everybody will be aware.
All right, thank you.
Very much, Kamal. Thank you very much, Nathaniel. All right, we'll be moving on to Opeyemi Abdul Salam.
Hi, good afternoon, everyone. Okay, so I wanted to ask actually, I realized that the prices of commodities generally, they were slightly lower than that's year on year from 2015. They were slightly lower than what we had in 2021. And it's not just because of the COVID pandemic, they've been low like from time immemorial. So I want to find out, is there a reason why, aside the COVID, why they sprung up this time? Was there any investment into the sector, any new policies that made this growth possible? Thank you.
Okay, thank you, Opeyemi. So this is David Ibidapo speaking. So if I get your question clearly, you're asking, before the pandemic, we saw that prices of commodities were not as high as what we have currently, right? Are you asking what could have led to this, right?
Yes, correct.
So across different commodities, different factors actually, right? So for maize, for example, right? So we saw the whole import ban on maize, right? That's actually, so Nigeria produces around 11 million metric ton of maize, right? And our consumption level is around 11.7 million. That's this may quoting 2019 numbers, right? So which puts our deficit at around 700,000 thereabouts, right? And before the ban, what we usually do was to import maize to close up this gap, right? So after the import ban on maize and the restriction of AFEX, right, we saw that there was a shift, right? So we saw that there was a shift to domestic supply for maize, right? And that's actually that pressure on demand from the demand side actually caused the higher prices of maize that we saw in 2020 and in 2021, right? But during the year 2021, which is this year, we saw that though prices of maize was increasing, but it was increasing at a decelerating rate, right? And why is that? And that's because of the CBN's intervention, right? So one of the things the CBN tried to do was to ensure that the major buyers of maize in the market were taken off the market, all right? And this time around, they were supplied to at a largely at a discounted price, right? So with that intervention, that took away a huge demand from the market, right? So though we still saw some level of increase in the price of maize, but it was actually a marginal increase, right? Then for sorghum, for example, right? So the whole FX issues, the fact that the Naira was devaluing against the dollars or was depreciating against the dollars as the case was, right? Was not favorable for brewers that source about 40% of their production, 30 to 40% of their production from the international market, right? And we understand the buyers behind selling sorghum to brewers because the northern part of the region is the major region that produces sorghum, right? And the buyers, because of the Islamic belief that, okay, beer consumption should not be encouraged and all those, right? That actually reduces the ability for brewers to be able to source this sorghum from the domestic market. But however, due to the whole FX issues, which increased the cost of procurement, right, brewers had to source the remaining 20 to 30%, right, from the domestic market. And that aggressive demand for sorghum actually pressured prices for sorghum during the year. So we saw that sorghum actually hit its all-time high around July in 2021, right? for cocoa, which is an export commodity, for example, right, we also saw that there were increased export activities. And why is that? So naturally, when your currency devalues against or weakens against the dollars, right, it means your commodity becomes cheaper for the international market. And also, when you look at the factors in the international space, Ghana being one of the largest exporters of cocoa, right, pulled out of the market and said they wanted to boost their value chain by putting more value to their cocoa instead of having to export a cocoa bean. So it left Ivory Coast and Nigeria to be, how will I explain it, for the demand for cocoa to come to, right? So we saw a lot of increase and in the export of cocoa, right? And also because of the lower supply of cocoa, it actually pressured prices. So across all I wouldn't have time to state all of these, right? But our report should be able to do justice to pointing out those factors out, right? So thank you very much. I hope I was able to answer a few of your questions.
Hi, Okoyemi. In addition to David's point, just to throw more light, one of the things we've discovered in our years of operation at AFEX is the fact that there's a direct correlation between commodities prices and the foreign exchange rates. To be specific, the parallel foreign exchange rates, right? So anytime you experience a devaluation of any form in the parallel market, the local commodities prices usually move in sync, which is one of the reasons why from 2015, you've always been seeing an increment in price of commodities. Yes, COVID was a factor last year, but for prior years, the devaluation of the Naira has reflected in commodities prices, and the pandemic of last year and the ban on importation of maize also caused to the higher price increase of maize that we experienced in the country last year.
Thank you, Yinka.
Thank you very much, Akinka. Thank you very much, David. Okay, Opeyemi, I hope that was clear. Would now be moving on to DK. DK Onwameze. Over to you.
Hello,
please.
can you hear my voice?
Yes, I can hear you clearly.
Okay, my question is on food security. From your report and analysis, what do you people have to say about food security in Nigeria? Are we making progress towards attaining it? What's the future holds regarding food security in the country? That's my question.
Thank you. Thank you very much for that. And I think this conversation will not be complete if we don't lay emphasis on the food security state of the country. In recent terms, a lot of attention has been drawn to the fact that Nigeria as a country is currently not food secured. Global best practices, just to draw parallel, in advanced countries and in some well-developed emerging countries as well, where commodities are produced in a particular year, consumption takes place in the following year, meaning there's usually a buffer of about 9 to 12 months for commodities produced. And what that means is most economies, especially the advanced economies, could survive for up to 9 months without having to rely on production of commodities, right? However, in Nigeria, as it is right now, everything we produce in a particular year, we consume in that same year. That's one. The other part is the fact that our productivity as a country is extremely low. So we don't even have enough to produce to consume locally. The third key part is what I call the absorptive capacity of our storage facilities. For comparison, in the US, about 80%, there's a storage facility for over 80% of every commodity produced in any particular year. In China, we have as high as 95%. And in South Africa, which is close to us, we have about over 70% absorptive capacity. However, in Nigeria, as it is right now, total volume of storage facilities we have is currently below 5%. Meaning, even if we're able to produce more than enough to consume and have enough to store, we don't even have anywhere to store it, right? So as such, saying we're improving on food security would not be saying the accurate facts, right? we have a long way to go. We have a long way to go in terms of infrastructure. More storage facilities need to be built to be able to ensure that we have enough capacity to store food across all parts of the country. Our logistics systems need to be worked on, right? Cost of moving commodities from where it's majorly produced to where majority of the consumption takes place is huge. Recently, there's news about the Kano-Lagos rail line being operational. If that functions very well, that's a good one to the government, but we need more work to be done on that. The second is access to quality inputs, not just fertilizer. We're talking about improved seeds, being able to adopt irrigation practices. If all these things are done, then we'll see an increased drive towards the food security of the country. One thing I know for sure is, even though we're not yet there, the government is sitting up very well and putting in structures to ensure that as a country, we have enough capacity to be able to be food secured. It might take a while. Maybe we will be looking at 18 to 36 month period before we see meaningful improvement in that area. But at least progress has started, and it's a journey that we all need to go together as Nigerians.
Thank you very much, Akinka. So we're running out of time.
Thank you.
As a result, we'll just go to the chat box and we'll take just one more question. So I'll hand over to Abimbola. So please randomly select one question from the chat box, which we'll be answering. Thank you.
Thank you, Oluchi. Here in the chat box, this question says, in the report, you are quite optimistic about maize and soybean production in your forecast. With the increase in output we're expecting, will it be enough to relieve the pain and groanings of poultry farmers? Plus, what is the production forecast in quantity? Will we be able to meet the local demand? So I'm going to pass this on to our CEO, Akinka Kitunde, to answer. Thank you.
Thank you, Abimbola. That's an interesting question, because when the pandemic struck last year, one thing that was clear to everybody, and which was all over the news, was the fact that a lot of small poultry farmers and people that have access to rearing poultry and producing egg had to shut down their businesses due to the low availability of the inputs and also high price of the inputs, right? And the question now we're asking is, are they likely to come back anytime soon? On the national level, a lot of efforts have been put in place by the central bank in terms of ensuring that there's price stability at the macro level for these smaller poultry farmers, because at the end of the day, the core focus of the CBN is price stabilization to curb inflation. So we saw the intervention of the CBN in the markets last year, which helped to stabilize these prices. The other part would be, yes, we see increased production in the market today, but increased production, which we estimated about 3 to 5%, is not enough to offset the pressure on demand, on supply rather. As such, it's not likely that we'll see price of commodities easing drastically over the next couple of months. And which implies that it's not likely that poultry farmers without a proper structure, and by proper structure, I mean access to cheap financing to be able to source capital in the short run, and access to long-term financing to be able to build an infrastructure that can scale on, then it's not likely that we'll see them coming back in. Meaning the demand will keep increasing, pressure will still be on commodities, and then most of these poultry farmers may not be able to come back there. The other thing we've been seeing actually, which is one of the things we do at AFEX, is being able to provide solutions to unlocking financing for players in this ecosystem. So one of the things we are pushing at AFEX is a solution that ensures that small poultry farmers could have access to these commodities in a timely manner to drive their production activities. And this is done by structuring bespoke financial solutions that helps them manage their working capital. One of these is what we did last year with the big guys. We call it the asset-backed commercial paper, in which we're able to raise funds and use it and we were able to allocate it to some of our customers to enable them gain access to commodity prices early on in the season. This financing was able to help them cushion the high price of the commodities and help them to remain in business over the course of the year. We're going a step further this year to ensure that smaller poultry operators, smaller farmers, younger guys that are starting up in this ecosystem have the capacity to be able to remain relevant in this industry, keeping their store open, ensuring their poultry farm is always running, and then ensuring that they're able to live on a productive livelihood.
Thank you, Akinka. Another question here says, how much does government policies affect your business in general so far? Able to minimize them? I think Nathan will undo this.
Thanks, Abimbola. I think that's a very important question, and everyone is always exposed to government policies. One that quickly comes to mind is that in some locations, we actually couldn't distribute fertilizers to some of our farmers because of some policies that was done by the state government. While we understand that government always has the best intention behind their decisions, it does sometimes affect us. What we do is to continually engage them to ensure that we can have a win-win situation at all times.
Another one says, what's the impact of the Forex right now on your business? Dollar to Naira exchange rate.
Oh, thanks. So because our operations, we earn in Naira essentially, and we also sell some of our staple crops in Nigeria, and so we're not as exposed. Yes, we have some of the export crops that we also sell as well, and so we both earn in Naira. We earn in dollars, beg your pardon, and our cost of operation are in Naira, and so the FX does not affect us much, if at all. Where we could see an application for us in terms of our current business is, for example, the processing center we're working on now, where we had to import some of the equipment that were used. And that's sort of what we saw an impact of the FX. But besides that, in our daily operations, we have little to no impact to the FX.
Thank you, Nathan. Oluyinka says, what percentage increase are we expecting for these crops? Akinka, over to you, please.
Please, can you repeat the question? It wasn't very clear, Abimbola.
Okay. What percentage increase are we expecting for these crops?
Also, in general, we're estimating 3% marginal increase global across the nation for production this year. And this is due majorly to the adoption of more use of fertilizer in their production processes. One of the key things required to actually scale these numbers, and which we hope more farmers will buy in over the next couple of years, is access to more land to be able to cultivate, then access to quality inputs early on in the season. One of the concerns for the coming year, I mean, everybody has been shouting about gas prices going up, and some are even estimating that your gas cylinder will be 10,000 naira per gas by the end of the year. Yes, this may be to us domestic consumers, but gas prices also directly affect production of one of the core raw materials that are used as inputs into the production process, which is urea. So in the coming year, we're likely to see an increase in price of urea. Now, if farmers couldn't access this in a timely manner and have the facility to access it, then we won't see an increase at the pace of production we would like to see in the coming year. But that being said, this year is still the marginal 3%. I will keep our resource open to see if over the next couple of years there's an increase in that.
Thank you, Akinka. Last but not least, this person says, why is cashew not included in the crop production report?
David, over to you.
Yeah, thanks, Akinka. Okay, so I think, okay, let me put on my video. All right, so it's very important for us at AFEX to ensure that we have more than enough data to work with when it comes to forecasting production levels, right? And so when we collected our sample, we collected our responses from farmers. So we found out that the sample size was not representative, right? And if we were going to work based on that, we would be releasing a spurious result, right? So as a result of that, what we did was to neglect cashew nuts, right, from the survey this year, right? But however, you can always call in and we could provide some form of insight. And we have our cashew nut report, which is published on our site. You will see enough insights there and what we think prices and production levels should be, but that's just based on what we think and not really driven by data. Thank you very much.
Thank you very much for that, David. Thank you to Akinka, thank you to Nathaniel, and thank you, Abimbola. So with that, we've come to the end of our Q&A session. We still have quite a number of unanswered questions and quite a number of people raised their hands whom we weren't able to call due to the time constraints. So unfortunately, we can't take your questions here. But like David said earlier, we are going to be sharing this material after this presentation. So you can actually always reach out to us via email. You can also get our other contact information on our website. And on our website, we also publish various reports, from our daily reports to our weekly reports, our monthly commodity reports. And we also have commodity in focus reports on our website, www.afexnigeria.com, where we speak to each of these topics in detail. So you can refer to all of those and also reach out to us for further clarifications. Thank you very much. And now I'll be calling up Nathaniel to give the closing remarks.
Thanks for that, Auna. We've come to this webinar and on behalf of AFEX and all partners involved in the development of this AFEX 2021 crop production survey report. I want to thank each and every one of us for attending this webinar. I believe you all have key takeaways from this webinar. A key takeaway for me is that a whole lot more needs to be done for the youth. We see the role that they play. And we also see that in some cases, when you look at farmers that are below 30, not a lot of contribution currently exists today. And a key takeaway for us is to increase that figure. As was asked by one of the participants, we have a lot of some initiatives in the pipeline that we will be releasing between this year and next year. And all of these will be aimed to bring in more young people into the agricultural sector. And we believe that together, working together, we can actually improve food security, achieve food security, and actually achieve the impact that we all desire. Once again, I thank everyone for attending this webinar, and I encourage us to continue to work together to harness Nigeria's commodities and talent to build shared wealth and prosperity while ensuring that we can all feed ourselves. Thank you.
Thank you very much, Nathaniel. We have now come to the end of this presentation. Thank you very much to all of our panelists. Thank you very much to all of our participants. Please don't hesitate to reach out to us where need be. Also, don't forget to go to our website to explore all of our materials on there, which share a lot of insights, even more than we have discussed on this call. Thank you very much to everyone and have a lovely day.
Thank you and have a lovely day.